So we want to bring in Ryan Dietrich. He's LPL Financial's Chief Market Strategist. And Ryan, great to talk to you. When you look at the market's move today, I think a lot of it has to do with those stimulus talks, some of those headlines that we're getting out of DC. It's helping investor sentiment a bit. If we do get a stimulus deal over the next 24 hours, or at least ahead of the holiday, what kind of reaction are you expecting to see in the market?
Well, that's a great question. You think about it, the second half of December is historically really strong. Everyone says, oh, Santa Claus comes in December. The first half of December is like flat on average on the S&P. So most of the gains happen late. But I'll tell you guys, after this huge rally that we've had, 10% rally in November, continued strength here, sentiment is getting off the charts. You know, I'm sure you have a lot of guests coming on. Everyone's got these really, 4,300, 4,400, 4,500 targets on the S&P. We're bullish too at LPL Research. We're coming on all year saying this is a bull market. It's going higher. But I'll tell you, that contrarian in me thinks maybe you finally get a sell the news type of mentality. Doesn't mean you have to have bad news. Just, hey, finally the stimulus is here with everyone optimistic. Look at that Bank of America Merrill Lynch survey of the fund managers, right? Most bullish people have been since 2011. I mean, we're not so lonely being bullish here. So maybe a well-deserved break sometime probably early next year would be perfectly normal and honestly healthy.
You say it's healthy. So then how should investors respond if we do see a little bit of a pullback in this rally?
Yeah, don't panic, I guess, is the first thing. After a 65, 66% rally off the lows, a pullback's normal. I mean, this bull market, this new bull market's tracking, if you will, the 2009 bull market, how it started. And we saw about a 10% correction early in 2010. So just kind of be aware that could be perfectly normal in the way we're positioning our models and portfolios for our more than 17,000 advisors. If we get a little bit of a pullback, we still like growth. I know lots of people are talking about value over growth. Growth is where the earnings are still coming from. We don't think things are as overvalued as what people make it sound. So we still comfortable with growth and emerging markets. If you want to talk about, yes, U.S. has had a great run. Emerging markets are not even above where they were in 2007. They're getting close to breaking out, but that's a nice area for some growth and some really cheap valuations. Those are two areas, growth and EM, that we think can do well in 2021 on any pullbacks.
Ryan, it's interesting what you're saying about emerging markets, because we've talked to a lot of our guests over the past several weeks, and they've said similar things. That Bank of America fund manager survey that you mentioned before on the bullish sentiment, it also had the most interest in emerging markets that we've seen in years. Specifically, though, within emerging markets, where are you finding opportunity, or what looks the most attractive at these current valuations?
Yeah, the Asian emerging markets, Taiwan and South Korea, right? I mean, what's Taiwan do? They make a lot of semiconductors, okay? Semiconductors continue to do well. We know China, right? No one truly trusts Chinese data, but we've seen some really positive steps there. So those Asian emerging markets are the areas that are really doing well. And, China's going to have positive GDP this year, right? I mean, next year we're looking at EM, emerging market growth, up over 5% if you look at kind of what we're expecting in 2021. So there's always risk with the emerging market. But let's be honest, the dollar's been weak. That's been a base case we've had for a while. A lot of Joe Biden's policies are a little weak U.S. dollar also. That's more of a tailwind for international investors, and we think it'll benefit the emerging market areas.
Ryan, I got to ask you about Bitcoin, because this rally that we've seen recently has really been extraordinary. It almost seems like nothing is stopping this momentum. We are seeing a little bit of a pullback in the price today. You can see it on your screen, but we're still above 22,000. I'm curious just how you're reading this, and if it's anything different than what we saw, say, compared to 3 years ago from your view.
Yeah, I'm really sorry to say this. Compliance will not let me talk about Bitcoin, so I can't answer that one. I'm sorry. Get in trouble. Don't want to get in trouble before the holidays.
We certainly don't want to get you in trouble. I had to throw it in there because it has been such a hot topic, I guess you can say, over the last couple of weeks. Ryan, what would you say is the biggest risk to the market here as we look ahead beyond COVID, beyond these stimulus negotiations? What else is maybe not on our radar that you think could potentially cause that pullback that you've been talking about, or cause at least some weakness here in the markets over the next 12 to 18 months?
Two things, kind of hinted at the first one, right? People are optimistic. That tends to mean everyone's already bought. Maybe you can have a pullback, but that's fine. The bigger picture one, maybe second half of next year, inflation. We haven't had inflation forever. We've got record monetary stimulus. We've got fiscal stimulus coming. The Fed already changed kind of the rule book earlier this year. Said, you know what, we're not going to hike rates until we see inflation. We used to hike rates ahead of inflation. So we're not saying the Fed is behind the eight ball, but some of these things, when you look at copper, steel stocks, aluminum, nickel, all these industrial metals, they're saying inflation very well could be coming the second half of next year. And if the Fed's a little behind the 8 ball, maybe that could be a little bit of a worry that could lead to a correction.
All right, Ryan Dietrich, always great to have you on, Chief Market Strategist with LPL Financial. We'll talk to you soon.
Thank you.